Hi there. We all know, either through fact or intuition, that the US dollar is the strongest currency in the world. So telling you this would not be interesting. What may be interesting, however, is to delve into the data and the reasons behind dollar strength. It may also be interesting to ask, so what? These are the subject of our discussion today. It is also part 4 of the series on international currency markets. Before I continue, however, do visit our website where I curate news and publications from international financial organizations and world central banks. Topics cover a wide range of financial and economic issues that affect individual countries or the world economy. For instance, COVID-19, inflation, or the war in Ukraine. Please also subscribe to this channel and be informed whenever we publish a new video. Historically, at least until the advent of the Bretton Woods system, currencies were generally backed by precious metals. For more than 2 centuries, under the so-called gold standard, this was gold. This meant that currency at the time could in theory be exchanged for gold, bullion, at a fixed price. As the Second World War was moving towards a conclusion, the Allied countries sought to create a new financial order. This was because they believed that the lack of monetary management after the First World War had led directly to the Second World War, and therefore sought ways to prevent that. Thus was born the Bretton Woods system. The 3 main features of the Bretton Woods system were: 1. The creation of a fixed exchange regime with all currencies fixed to the US dollar as a reserve currency, which itself was fixed to gold at $35 per ounce. 2. The creation of the International Monetary Fund. And 3. The creation of the International Bank for Reconstruction and Development, which is now part of the World Bank Group. In their book, Modern Macroeconomics, Snowden and Vane say this of the Bretton Woods arrangements, and I quote, "A major concern of the Bretton Woods delegates was to help prevent a recurrence of the disastrous events and consequences of economic mismanagement that had occurred during the interwar years. The outcome of the meeting was the creation of what John Maynard Keynes labeled the Bretton Woods twins, the International Monetary Fund, IMF, and the International Bank for Reconstruction and Development, IBRD, now known as the World Bank. While the main objective of the World Bank is to focus on long-term economic development and poverty reduction issues, the main objective of the IMF, as originally set out in its Articles of Agreement, Charter, is the short-run stabilization of the international monetary system. In December 1945, the IMF officially came into existence when 29 countries joined, and it finally began financial operations on 1 March 1947. The World Bank began formal operations on 25 June 1946. End quote. This was the beginning of dollar dominance. And although the Bretton Woods system was finally ended unilaterally by the US in 1971, the dollar's status as the world's reserve currency had already been cemented. So that is the brief historical context. But what accounts for dollar strength in the current international economy? Several factors can be identified. A. Trade. Dollar pricing and invoicing of commodities and other cross-border transactions. B. Financing. Dollar-denominated financing contracts or financing raised in American markets. This is a topic I discussed in part 2 of this series. I will include a link up here to this video. In a paper, BIS Bulletin 62, Global Exchange Rate Adjustments, Drivers, Impacts, and Policy Implications, Hoffman and others say this, and I quote, The world economy has been hit by two major shocks in succession: the COVID-19 pandemic and the Russian invasion of Ukraine, which have contributed to a significant rise in inflation and a global economic slowdown. These global shocks and the monetary policy responses to contain inflation have been associated with large exchange rate adjustments. In particular, the broad US dollar index has appreciated by around 10% since the beginning of this year, reaching its highest level in almost 4 decades. Graph 1, left-hand panel. The US dollar's appreciation has been broad-based against almost all major global currencies, with only a few exceptions. Right-hand panel, end quote. C. Central bank reserve holdings. While central banks hold precautionary foreign reserves, mainly of major currencies or assets, to shock-proof their economies against future external shocks, dollars or dollar-denominated assets tend to be a big percentage of such reserves. China and Taiwan, for instance, are known to hold very large dollar assets, with the People's Bank of China at some point holding more than $1 trillion worth. Even the Russian central bank held large dollar deposits, which made it vulnerable to US and Western sanctions at the beginning of the war in Ukraine. In a paper, Central Banks as Dollar Lenders of Last Resort, Implications for Regulation and Reserve Holdings, Das and others say this, and I quote, "Central banks around the world hold large balances of foreign currency reserves, with the US dollar accounting for the dominant share of these reserves at about 59% of the total. In the aggregate, foreign official accounts held $7.06 trillion of dollar securities in March of 2022, with $4.06 trillion of this in the form of US Treasury securities," end quote. They go on to conclude that, and I quote, "Our empirical work suggests that one important motive for these reserve holdings is a concern on the part of central banks with currency mismatch in the composition of private sector liabilities in their countries, with many firms financing themselves heavily with relatively cheap dollar borrowing. Ironically, however, the collective reserve accumulation decisions of individual price-taking central banks can exacerbate this mismatch problem because they drive down dollar interest rates and thereby further increase the incentive for the private sector to overborrow in dollars," end quote. D. Haven status versus other reserve currencies. The dollar is regarded as a haven compared to other reserve currencies. There are several reasons for this, including the size of the US economy, the liberal US capital and financial markets, and the stability of the economic, financial, and political system, in contrast to other reserve currencies. All these factors contribute to the staggering volume of dollar trades, including foreign exchange derivatives, which we discussed in part 3 of this series. For more on the numbers, I will include a link up here to part 3. So, what are the implications of dollar strength for the world economy? A. Expensive imports. Unless the exchange rate can adjust sufficiently to compensate, it means imports by the rest of the world will become expensive when converted to the local currency. This will feed into the second implication, namely B. Inflation going up, the so-called imported inflation. C. Increased debt servicing costs for borrowings in dollars. This affects both corporates and governments. As far as governments are concerned, high debt servicing costs have budgetary implications and impact on local spending. And at the extreme, social unrest, and political consequences. Foreign exchange interventions may be necessary, but should be used with circumspection, and focus should be on traditional macroeconomic policies. In an IMF blog, IMF Deputy MD Gopinath and Chief Economist Gurinchas say this, and I quote, "Temporary foreign exchange intervention may be appropriate. This can also help prevent adverse financial amplification if a large depreciation increases financial stability risks, such as corporate defaults due to mismatches. Finally, temporary intervention can also support monetary policy in the rare circumstances where a large exchange rate depreciation could de-anchor inflation expectation, and monetary policy alone cannot restore price stability." End quote. Hoffman and others in the BIS bulletin mentioned before conclude this way, and I quote, "Finally, there is the question of whether the sharp appreciation of the dollar makes the case for greater global coordination of monetary policy. The concern could be that central banks may otherwise over-tighten monetary policy from a global standpoint as they try to limit exchange rate depreciations. While most central banks have increased policy rates rapidly in recent months and have communicated their intention to hike rates further, real interest rates have declined over the past year or so and remain negative in most regions." Graph 5, right-hand panel. Furthermore, inflation remains stubbornly elevated. These observations caution against the notion that monetary policy is overreacting to the global surge in inflation. End quote. Finally, I want to briefly talk about dollar dominance and central bank digital currencies. Given the US skepticism about creating a dollar-denominated CBDC, there have been commentators that have suggested that this would weaken the dollar status as the dominant reserve currency. Fed Governor Christopher Waller, in a speech in October 2022 titled "The US Dollar and Central Bank Digital Currencies," counters by arguing that, and I quote, "By any measure, the dollar is the dominant global currency for funding markets, foreign exchange transactions, and invoicing. It also is the world's predominant reserve currency. The dollar's role doesn't only benefit the United States. The dollar serves as a safe, stable, and dependable form of money around the world. It serves as a reliable common denominator for global trade and a dependable settlement instrument for cross-border payments. The factors supporting the primacy of the dollar are not technological, but include ample supply and liquid market for US Treasury securities and other debt, and the long-standing stability of the US economy and political system. No other country is fully comparable with the United States on those fronts, and a CBDC would not change that." End quote.